Hello, everybody. I don't know if I will get some slides, but I think I have like 3 or 4 minutes, so
Right.
I start speaking and see if some slides pop up. So I represent HealthCap. HealthCap is a venture capital company. We're based in Stockholm, Lausanne, in Switzerland as well. We've been around for about 15 years. We today have about 900 million euro under management. We have a recent fund in place, so we are actively investing as we speak. We have made 2 investments from this new fund. We have made roughly a little bit more than 90 investments over this 15 years period. We have taken about 26 companies public. We are 9 partners. 5 of us have an MD, PhD background. And you will see this on the next slide after this one, which is basically a summary of hopefully what I just said. But maybe more important, what are we looking for and what are we aiming for? So the next slide, please. As I said, I mean, 15 years, of course, you have a number of lessons learned. One of the challenges I think all of us in this business have faced over these years is the long holding periods and the capital need, in particular in drug development. So that is something we just need to reduce and we need to shorten. Solution, what are we looking for? We are still looking for transformational technology, something that really changed medical practice. But not only that, I think the demand now is also to reduce costs. We have to really have health economic aspects to every product we invest in. An advantage that we see is Europe versus US. The regulatory approval time, in particular in medtech, today between Europe and US, differ between the PMA versus the CE mark is almost 4 years today, which from a cash point of view is extremely important. Thereby, Europe is a very important and advantageous place to be in, to have an early commercial launch. Product validation, it is not that important what stage the company is in. I don't think we talk about early stage or late stage. It's more about how validated is the product, be it in animal models or in human testing. Organization, I think this is becoming more and more important. The way we organize the business, the way we organize companies developing drugs is different from big pharma. On the slide to the right there, we have actually looked at all our investments in drugs and compare it with sort of the average industry standard for attrition rate. If we would have been a big pharma, we would have 9 products approved. Our companies have brought 15 medical products to the market. Experience, more and more important, bring in experience management. Hopefully we are more experienced after 15 years and thereby hopefully from a board position can help management to deliver. So, conclusion, people have said that the venture model is dead. It's not dead. Looking forward to a good meeting. Thank you.
Thank you very much, Johan Christensson. Thank you. That was from HealthCap and now Merck Serono Ventures and with Jesper Boss. Please.
Hi, good morning. I'm Jesper. I'll tell you a little bit about what we do at Merck Serono Ventures. I think I do have one slide, but I don't know where it is.
It's right there.
Oh, yeah, it's right there. Okay. Okay, with Merck Serono Ventures, we are a strategic investor, meaning we are a normal VC, but we tend to focus on those core strategic areas where Merck Serono, a mid-cap pharma company, is active in. We are
the microphone.
Yeah, all right. We are a 40 million euro fund, so we are relatively small. That means that we tend to focus on early stage deals. With these deals, we tend to go in at seed stage, Series A stage. One nice example, for instance, was a deal we did recently, I think 10 kilometers away here in Lund, in a company called Galecto, that we actually seed funded with Novo Seeds. That's an example of a technology where we see multiple applications in both the fields of oncology, the fields of autoimmune disorders and fibrosis, and where we would like to use our venture funding to basically create a relationship between board and management that would allow us as a parent company later on to easier get into discussions around licensing, acquisition, or any other next stage in this partnership. We don't take options, we don't take special rights, but we always invest with the idea that if we have been an active investor and been on the board of a company for, let's say, 3 to 4 years, And if that by then we haven't succeeded in convincing you guys that we are nice people to work with and your preferred partner for licensing, then I think we've all done something completely wrong. As I said, we are a 40 million euro fund. You can see that by now we've done 6 deals out of this fund, so we can do 2 or 3 more. And we'll be going back to our executive board later this year to raise a larger fund. Last year we raised an interesting new fund, which is dedicated for Israel. A very small, 10 million, truly startup fund where we actually incubate companies. We build a facility there, and we guide them from, let's say, really startup phase to the Series A phase. Okay, thank you.
Thank you very much. Thank you. And now from Alma Invest, Claes Post. And please line up all the other investors so we are ready to start. Welcome.
Morning.
Good morning.
Thank you very much. Nice being here. I'm from Alma Invest. Alma is a subsidiary of Alma Företagspartner. So we are handling public money. We next slide, please. We are investing in private equity. Next slide, please. Alma Invest is divided in several funds, and I work mostly with the Stockholm and Eastern Mid-Swede Fund. We invest in all areas. In the life science, we have done about 25% of our investments, and we also have a couple of exits in that area. Alma Invest has about 1.3 billion Swedish crowns under management. We take our decisions in the group and anchor it in an investment committee. So we are trying to be quite fast in our investment cases. You're very much welcome to talk to me during the meeting. Thank you very much.
Thank you very much, Claes Post. And now from BioVentures investors, Jeffrey T. Barnes, please.
Thank you very much. Okay, just a few minutes on BioVentures investors. Thank you very much for allowing me to convey what some of our strategy is.
Now you turn it off.
What's that?
You turn it off. Is it right?
There we go.
Huh.
Right.
Good.
So we were founded in 1999, so we have been around for quite a while. Our traditional focus has been in therapeutics, biotechnology, genomics, and medical devices and instrumentation. Since 1999, we've invested in over 50 life science companies in that area, committing over $275 million. We've also been responsible for founding a number of life science companies, including Applied Spine Technologies, Claros Diagnostics, Myriad Genetics, and Biogen, based in Boston. Our current strategy has really been shifting a little bit from therapeutics more towards the medical device and diagnostic space. We believe that these sectors have typically not been served that well by the venture capital community, so we believe that there is still tremendous opportunity in the medical device and diagnostic space. We've seen it less capital intensive. We believe that there's been more opportunity for strategic investments, particularly from large industry players, and in fact about 40% of our medical device investments have been co-invested with larger medical technology players. And we still believe that there is an abundance of technology that is currently available to apply to medical and diagnostic solutions. Very briefly, what is our investment strategy? First and foremost, we like to enable change, and we like to enable a paradigm shift. And this goes beyond simply improving the way that current medical diagnostics and medical technology is done. We really want to shift, in many cases, where a lot of therapies and diagnostics are delivered. In many cases, that's out of the operating room into other areas of healthcare and private practice. Secondly, we like to be first. We really like to invest in innovative technologies with first entrants. We tend to shy away from second, third, and fourth generation technology. Specifically, we believe that we create more value at each step of the company's life cycle by being first, and try to avoid the later generation technologies where it is more difficult to create value at each step of the phase. Thirdly, we like to invest early. We are not adverse at all to early stage, inception stage companies. Many of the companies in our portfolio we were very, very early stage investors in. And we believe that this is an opportunity to reduce risk and create value very, very early. Specifically, we like to be on the left-hand side of this curve, where for a modest amount of capital that we can reduce significant amount of risk, as opposed into the later stages or near commercialization phase of a company, where although risk can be reduced, it requires a substantially more invested capital. So we much prefer to be at the earlier end of the company's life cycle. Fourth, we like to address unmet medical needs. So we are still looking for applying existing technologies to new medical solutions. And lastly, we want to avoid capital-intensive investing. We want to target companies specifically that we can exit prior to regulatory approval or commercialization. And that has been very, very typical of what we have done in our portfolio so far. Specifically, we like to put a little bit of capital to work early on and try to avoid the later stage investments in these companies where risk, although can be reduced, but requires a lot more capital.
Good.
And lastly, we need to stay close to our acquirers. Particularly for most of our portfolio, the typical exit scenario has been on the M&A front with acquisitions from a lot of the larger medical technology diagnostics companies. And so because M&A is so key to our returns, we stay very close to the potential acquirers.
Thank you very much, then. Thank you very much, Jeffrey Barnes. Thank you. And now GCK with Declan Jones.
Hello, hi, thank you very much.
Welcome.
My name's Declan Jones. I head up the research team within GlaxoSmithKline's Centre of Excellence for External Drug Discovery. And this is a slightly different focus. We're drug discovery and development partners rather than venture capitalists. The SEED mission, we are a dedicated multidisciplinary team of drug discovery and drug development scientists. We're 12 folks at the moment. We were founded in 2005. We're half based in the UK, half based in the US. And our aim is to enable GSK to access innovative platforms for drug discovery and development through a focused collaboration with biotech partners. We only work with biotech partners with with customized deal terms, including upfront access fees, potentially equity investments, and success-driven milestones, with the aim of delivering to GSK something which will ultimately be of value to the patients. So we're aiming to try and achieve early proof of innovation and transition of assets for further development within GSK. We have no internal pipeline. So basically our success is entirely dependent on the success of the biotech partner. Okay, GSK is a big organization and very complicated for folks outside of GSK. Just a point or two about where we sit in GSK. We sit very firmly in the drug discovery and development arm of GSK. Our closest relatives are the internal therapeutic area units, and as part of that are the discovery performance units. Now, unlike those groups, they have a single therapeutic area, they have a defined strategy, and they have both an internal and external portfolio. The SEED is, we have an entirely external portfolio. We're not limited by therapeutic area. We work across all the therapeutic areas. And our remit is to try and challenge the GSK system and deliver proof of innovation. We work closely with other groups in GSK, including the business development arms. We have business development folks embedded within the SEED, as well as those guys embedded within the therapeutic areas. And we liaise, but don't work that closely with SR1, the GSK venture capital arm. Now, some of you may have come across the SEED before in the past. We worked very much with biotech partners to deliver proof of concept drugs to GSK. So we in-licensed to GSK usually at the phase 2B and beyond. However, in our next 3-year business plan, we're intending to work across the whole sort of spectrum of drug discovery, from in-licensed assets that may be evidence of innovation of a drug discovery platform at the lead or candidate selection criteria, or at phase 1 or even beyond that. Essentially, we want to work with the biotech partner to access what they're really good at. and then in-license the asset and develop it within GSK. So we'll form focused alliances with a clear science focus, with a flexible deal model, with a rapid progress towards proof of innovation, wherever that lies along the drug discovery spectrum. So what are we looking for? We're looking for companies that have an absolute leading position in either a specific drug discovery technology or a therapeutic area which GSK currently doesn't have expertise in. But this is always based on absolute first-class science. Ideally, there will be assets or targets which are relevant to that platform. And we're also looking for a strong management team. So that's what we're looking for. Essentially, what we can offer is we have a lot of experience in working with our biotech partners. I've listed some of the companies that we work with currently, including Prosensa, Chemocentrics, Oncomed, Chroma, and these sit across different therapeutic areas. They sit across different treatment modalities, from oligonucleotides to small molecules to antibodies. Via the seed, you'll be able to access the best of GSK via our focus group, which works with external partners, Serono, that provides preclinical development support and early clinical development support. Our colleagues in the wider GSK field, and also the therapeutic experts wherever they sit in GSK. And you'll gain a team of champions right from the start all the way through the alliance. My team is associated with scouting for new opportunities, for working with the partners in the due diligence process and driving this through to GSK's committees, but also working on the joint steering committee with the partner all the way through the alliance. So with that, I'll direct it to our website, and I'd be happy to talk to any folks during the day. Thank you.
Thank you very much, Declan Jones. And now from DNB, Mr. Ulf Strandberg. Thank you.
Thank you, Klaus. My name is Ulf Strandberg. I'm head of healthcare Sweden in DNB Bank, large corporates and institutions division. We have a somewhat different interest in you from the others, but we'll come to that shortly. DNB is obviously a Norwegian bank, and Norway is in good shape. We are owned 34% by the Norwegian state. We are the second largest bank in the Nordic, counted by market cap. 48% of our business comes from private individuals, but more than 50% is from international business. And we have 14 rep offices, so 14 branches along the globe. We are the biggest shipping and offshore bank in the world, and energy and seafood are also important areas for us. But telecom, healthcare, and forest industries are growing rapidly, and we are the only Nordic bank with a specialized and international focus on healthcare. Out of 50 international healthcare clients, more than, I think, 60% is in the US. And we have an international setup with 20 persons in Scandinavia and in New York. So this picture illustrates our deep presence in the United States. Obviously, Bank of America is the largest bank, and it has led transactions for over $113 billion. But on the 10th place is a Nordic bank, that's the DNB. And also in markets, we are a significant player. 25% of the trading on the Oslo Börs is by DNB. And so far this year, we have led up to 592 million NOK of equity issues. So there's a good sentiment on the Norwegian stock exchange. And this is our interest. We are dedicated in healthcare in DNB. We are obviously a stable bank. Some of you may want to deposit money with us, and this could be a good start of a relationship to a debt finance expansion. We can also help you with equity transactions, and we have a strong interest in your technology. So we would be pleased to meet you in our stand to discuss your technology and see how that could fit in with other international customers of DNB. Thank you very much.
Thank you, Mr. Ulf Strandberg. And now for Karolinska Development, Mr. Daniel Bolanovsky. Thank you. Welcome.
Yes, you can hear me. Karolinska Development originates from Karolinska Institute and their innovation system, hence the name and also hence the characteristics of our investments. Today we are a 27 company strong portfolio that runs around 36 projects. 14 of those are in clinical phase right now. We are not an investment fund. We used to be. We're now a public company, got listed on the Stockholm Stock Exchange in April last year. And our typical, let's see here, innovation flow comes from usually the tech transfer organizations at in part Karolinska Institute, but also from various universities in Sweden and the Nordic region. Those organizations have screened more than 1,200 IDs during the years. We've invested in 59 life science companies since 2003. Our strategy is basically high engagement investments. We have now, since our new management that were brought in by start of last year, we now have a setup like a mid-sized pharma company with line responsibilities for new management. This is to support our portfolio companies and to allocate and reallocate resources where needed in the portfolio, which means that we're highly involved throughout the process, throughout the drug development or tech development process. This is a picture of our pharmaceutical portfolio. I know many of these companies are here today. Even more technology projects. And I think I'm going to skip this slide. Business development is one of our key areas. That's one of my key areas, actually. But this is probably more important to you guys, our investment strategies and what we're looking for. That is good differentiated science, a good IP setup, and of course a commercial potential in these projects. Other than that, I said before that we looked at projects stemming from university TTOs usually, but we're very open now, especially now since we're a public company and what we look into. So we're very open to all kinds of ideas. Again, an active investors. A lot of people ask us, since I'll show you a snapshot of the therapeutic areas that we're involved with, do you only invest in those areas? No, we invest in all areas as long as the innovation is attractive enough. And I think that's it.
Thank you very much. Thank you. From Karolinska Development, thank you. And now from Serendipity Innovations, Amin Omarani. Welcome.
Thank you, Klaus, and good morning. My name is Amin Omrani. I am the Chief Operations Officer at Serendipity Innovations. Serendipity is a privately held business incubator and venture management company. We focus on commercialization of technologies that stem from academic environments mainly. And we don't have a fund structure. We invest directly from our balance sheet. We are very long-term investors, and our aim is to build Sweden's next large-cap companies. Next slide. The management team, the co-founder and CEO of the company, Said Esmailzadeh, professor in materials chemistry. Ashkan Puya is our chairman. He's an economy major. We have Bengt Arnevedin, who's a professor in innovation management. He has written over 70 books in this subject and is a professor emeritus nowadays. Cecilia Gunne, a very senior tax attorney, and Anders Wall, who is a famous face for you Swedes at least. He's a big industrialist here in Sweden. Next slide. We have had a quite good and organic growth over the years. We have about 250 million Swedish crowns on our balance sheet, and over the last 4 years we have had a average return on equity of about 35%. Next slide. We don't have a specific focus on a specific industry. We rather specialize in the innovation process. So as you can see, we have companies within IT and advanced materials, all the way to biotech and medtech. We tend to be very, very involved in these companies. So we have been a part of founding these companies, and some of them are very early stage. Others are in large-scale production, and Episurf, which is one of the companies that we'll be talking a little more about. Next slide. Does individualized knee implants. This is a unique concept that Episurf does. This company is listed on Nasdaq OMX, for example. Next slide, please. It addresses a very large problem. It's 10% of the world's population have some sort of cartilage damage, which leads to osteoarthritis, and we have developed a technique that makes it possible to do individualized knee implants and also instruments to insert these implants to stop the degenerative process of the cartilage damage. Next slide, please. Diamorph is another company. Has nothing to do with biotech or medtech, but this goes to show that we are very varied in our portfolio. Diamorph works with advanced materials. Next slide, please. And in Diamorph, we work with high-tech ceramics, and we develop ceramics with different properties based on a special production technology that we own. And today we deliver to Saab Aeronautics ceramics for their flying structures, as they like to call them, and also ballistic protection and some other applications. And with that, I would like to thank you and hope to talk to some of you during the day. Thank you very much.
Thank you, Amin Omrani. Thank you. And now from Sunstone Capital, Klaus Andersson, please, welcome.
Sure. Sunstone Capital, that's a Copenhagen-based venture fund. The next slide, please. The organization is structured such that we have an ICT investment division and a life science investment division. In total, we manage assets of around $1 billion. The current funds that we're investing out of is our fund number 3. We had our first close in the third fund at around 90 million euros just before Christmas. And next slide, please. We think that being great at doing venture and in particular earning on this kind of transactions, you will depend heavily on having the right human resources available. It's a people's game. So we have the core team on the yellow over there, our team is headed by Peter Benson with a very broad experience. And then we are 5 partners. But in order to supplement us and in order for us to get the best and most up-to-date directions from what pharma wants and what they are looking for, we have a very close interaction with either previous or current business development people, also people from drug development. These are people that we have very extensive NDAs with, meaning that we can actually expose some of our portfolio companies to these guys, and they will give us their read on the current situation. They can also help us with management issues or whatever. We find this kind of characteristic and also kind of unique to Sunstone Capital. So what we do invest in, actually we do invest in medtech. We haven't done any software investments yet. We focus on medtech projects, in particular with a European first rollout strategy. And then we also invest in conventional drug development. Our fund is pretty new, so in case we're going to do any new investments, we want to put them at the beginning of the fund, obviously. And then we also focus on diagnostics. So these are the three areas we're looking for. I haven't got time to go into our new investment instrument called the EEP, the Early Engagement Program, where we actually will be able to do pretty early investments. But you can either grab hold of me or Lisa or Jacob, who are also here from Sunstone Capital, to get further details on this. Next slide, please. So based on the feedback we got from pharma, we think pharma has really focused much more than we've seen ever before. It's much more an asset-driven thinking that they are part of, and they are much more focused on on two items, either filling up their pipeline with new drugs or also meeting some of the socioeconomic requirements that have been raised from the public. And we respond to this by establishing only very focused, very small organizations. And we also we think the days where we have 4 or 5 drugs in the pipeline, those days are over. We want a lean, mean management team instead. Next slide, please. So the basic requirements we have: we want the team to be in place. We want the markets to be addressable. Either we want a big market share in a small market, or we want a small piece of a big market, or both, if possible. We are 10-year lifetime fund, meaning that we are not going to do very early investments in the primary fund. But again, get back to us on the EEP. Next slide, please. Just to finish off the introduction here, these are the venture funds that we have co-invested with in our 32 portfolio companies, and we will be happy to expand the circles even further. Thank you very much for your attention.
Thank you, Mr. Claes Andersson. Thank you. And now Takeda Ventures with Yuji Lisava. Well, very welcome.
Thank you. Takeda Ventures Inc. is a corporate venture arm of Takeda Pharmaceutical Company. So first I explain Takeda very briefly. Takeda was founded in 1781, so we have a 230 years history. And the headquarters is in Japan, and Takeda is the largest pharmaceutical company in Japan. And after the acquisition of Nycomed, Takeda's presence increased more than 70 countries in the world. Next, Takeda Ventures Inc., better known as TBI. TBI is located in Palo Alto, California, that is so-called Biotech Bay. The mission is through corporate venturing activities, we create access to novel emerging technology, product, and business opportunities for Takeda. This is TBI venturing approach. Previously, we were focusing on this part, that is to maximize success within existing business system and industry. But we are now targeting more broadly and more strategically in a new business system and future industry. This is the investment philosophy. We have $100 million committed capital from Takeda. Investment side is in the range of 0.5 to $5 million. Stage is seed to Series B or C, and we are covering North America and Europe. And we have invested nearly $50 million so far in 18 bioventures. And our purpose of our investment is not financial return, but strategic return, such as research collaboration, licensing, and acquisition of the company by Takeda in the future. Our therapeutic focus is metabolic diseases, CNS, oncology, and inflammatory diseases. And in addition to such basic interest, we are also interested in the vaccine technology and regenerative medicine. But infectious disease devices and diagnostics are out of our focus. But I must say that these are general policy, and we handle case by case based on our future strategy. Our investment objectives for Takeda, strategic return. So those are early access to innovation and future partnerships. And the value we provide to a partner is industry perspective, validation of the technology, and we are gateway to Takeda, and we hope to have a long-term relationship. This is Mount Fuji in Japan, and here is Takeda Shonan Research Center. We are located in United States, but we have a tight relationship with the research division here. So I hope some of you would visit here for business and scientific discussion in the future. So if you are interested in our activity, please contact me. Thank you.
Thank you, Lucy Ishava. Thank you. And now from Limbic Ventures, Johan Kördel. Please.
So I have a German name. My name is Johan Kördel, said in Östgötska. Limbic Ventures is an investor that purely invests for profit. It's not a strategic investor despite its name. It's actually the owner of the CNS company Lundbeck, as indeed the owner of the allergy company ALK Bio and the ambulance emergency care company Falk. But we are like a corporate investor in that we are evergreen. All the partners are ex-operational people, and we can take a long-term view on our investments. We are presently investing up to 50 million euros per year, which means that we are looking towards the later stage of the value creation chain. We prefer to invest in companies that are already established and that are looking for larger amounts of capital. And our ideal bite size right now is 10 million euros per investment occasion, which of course can be multiplied a number of times over the lifetime of a company. So what about you? Well, I don't think I'm going to say something different than those among my colleagues that have been up here on the stage. We're looking for people, people that are passionate about their idea, that have experience, and that have knowledge. I think we're all learning that people are really, apart from the idea, the asset that we prefer to invest in. Your idea should be unique. We're not interested in incremental improvements. It should really meet an unmet medical need that has a real market potential. When it comes to what we invest in, we invest very broadly in life science. It can be medtech, both machines and devices. It could be pharmaceutical, biopharmaceutical, biotech style companies and projects. It could be diagnostics. It could even be healthcare services. When it comes to geography, we invest in Europe and we invest in the US. We still have to develop as an organization before we would dare to invest in other territories. When it comes to the stage of your company, as I said, because we look for larger investments and later stage investments, we would prefer, if you were a biotech pharma company, if you were in clinical trials. Depending on the therapeutic area, we're going to put higher or lower hurdles. And I would like to stress that in the CNS area, because the organization has already taken a very large risk by owning Lundbeck, we put very high hurdles. When it comes to devices and medtech investments, we would prefer it if you're moving towards the commercialization phase. So if there's a prototype or preferably already a CE mark or a 510K or PMA in place. And just to give you a snapshot of where we are right now, we made 10 investments to date. Our latest was last week, an investment in a French company called Enterome, and we're making our 11th investment this week, which will be in a US-based company to be announced in a day or two. Thank you.
Thank you, Mr. Johan Kördel. And please welcome Novo Seeds Nana Lynberg.
Hello. Hello everyone. I'd like to start by just reminding you that Novo is actually the holding company within the larger Novo group. So we manage the assets on behalf of the Novo Nordisk Foundation. The Novo Nordisk Foundation gives out research grants to fund both basic and clinical research throughout Scandinavia, and gave out 450 million Danish kroner last year. And this year that's going to be more like 650 million. Within the Novo group, we have the dividends from the shareholdings in Novo Nordisk and Novozymes, which fund our investment activities within life sciences. The Novo Ventures was started in 2000, and Novo Seeds, which is where I work, was added in 2007. And then the latest activity is the Novo Growth Equity, which started in 2009. What's a little bit different about Novo Seeds compared to a lot of venture investors is that we also manage the pre-seed grant program, which is the red boxes over here on the side, which is actually on behalf of the Novo Nordisk Foundation. They are grants. They're money that are given out not in return for shares, but basically to incubate and mature projects so that they're ready for a full-stage seed investment. So the way we think about it is that we really try and support the entire innovation change in research. As you can see, the Novo Nordisk Foundation gives out the grants and funds those, and whereas the Novo groups invest in early stage seed through to venture and also more commercialized or later stage commercial companies actually bringing products to the market. And Novo Seed sits somewhere in between, trying to bridge that gap between early stage research and venture. In terms of our team, it's been expanded a little bit recently. So Søren Møller is the managing investment director, and he joined just before Christmas, and I've just joined beginning of this month. The other guys have been there for a few years. The idea is that we're going to be making more investments than we have done in the past, now that there's more of us. Common to all of us is that we have a scientific background, and we have a variety of experiences from both biotech and medtech and venture capital. So in terms of our deal flow, we tend to look at 120 to 150 projects every year, and the aim is this year to whittle that down to making 5 or 6 new seed companies and give out 6 to 8 pre-seed grants in addition to that. And I can't take much credit for this, having just started myself, but my colleagues in Novo Seeds have been quite successful in establishing Novo Seeds as a major starter of new companies. So this is an article from a Danish paper that was published last week, showing that over the last 4 years, Novo Seeds has led the investment in about half of all the biotech companies that have actually been started in Denmark in that period. But thankfully, we're also increasing our geographic diversity. Although we started in 2007 with the majority of deals coming from Denmark, recent years we've seen only about half of our deals coming from Denmark, and the rest of Scandinavia being increasingly well represented, in particular Sweden. And we do see quite a lot of value in being able to build our companies from the pre-seed grants through to seed stage investment. So this shows 4 of the companies that we started out with as a pre-seed grant and have now gone on to become a company with a seed investment. And one company, Orphezyme, also last year managed to graduate to the next step of being getting a full Series A, 14 million euro round investment, which was led by Novo Ventures, AceCap, and Sunstone. And just finally, this is a portfolio of companies that we've invested in to date. I'm happy to announce that this, the latest investment in 2012 has been announced. It was press released yesterday, and it's our first medtech investment, and it's also based here in Sweden, in Gothenburg. It's a company called Denata. So we're very excited about that, and hopefully we'll make lots of great new Swedish and new medtech investments in the rest of the year. Thanks very much, and I hope to speak to some of you later today.
Thank you, Dana Lindborg. Thank you. Thank you. And coming up next is Seed Capital with Anne-Catherine Wilhelm. But here comes a man, so it must be someone else.
Right.
Please, you can present yourself.
Good morning. My name is Frank Knudsen. I'm the investment director for life science at Seed Capital. And Katrina is our lawyer. She's in the audience as well. Just briefly going to present to you Seed Capital. We are an early stage pre-seed and seed investor based in Lyngby, just north of Copenhagen. We've been in business since 2004, and we are today in our second fund. We operate both a pre-seed program funded by government money and have the private seed fund to follow up on these investments afterwards. Our present fund is close to 100 million euro and was started in the beginning of 2011, and this fund is still operating. All our funds are closed-end funds, meaning that we invest for about 5 years and then we have a realization period of another 5 years. We also manage some older funds which have ceased investing. In the pre-seed program, we invest on an annual basis approximately 6 million euros in very, very early stage spin-outs, very often coming from the universities. We have today 70 portfolio companies covering both ICT, clean tech, and life science being both medtech and biotech. and we have attracted approximately 260 million euros to our portfolio. The way our portfolio is divided is approximately half of it is coming from life science, and half of that is medtech, which is our preferred investment area at the moment. We operate very much as a classical venture or seed investor, meaning that we build the companies, and then we try to exit them within a time scope of 5 to 7 years. Deal flow is coming predominantly from the Copenhagen area, but also from southern Sweden. Very large deal flow coming from the universities, also spin-outs from existing companies. On an annual basis, we do up to 15 very, very early pre-seed investments and 3 to 4 seed investments. What are we looking for? We are looking for large unmet medical needs, significant markets, very often teams which have done similar projects before. And of course, there has to be a significant exit potential for all the investments which we do. Within the medtech area, we have no focus on any particular field of use. We look for devices and apparatus or diagnostics with a clear medical benefit, with the clinical documentation in place, and very often also with business models built on consumables. The capital need, our sweet spot, is in the area of 2 to 4 million euros. The exit horizons has to be within 3 or 4 years, and the market size of the investment approximately 1 billion Danish kroner. Just a short look on our portfolio. Most of the companies we have invested in are in clinical development. A few have approached commercialization already. We've done a number of exits. Most significant biotech exit is perhaps Evolva, which is today listed on the Swiss Stock Exchange. Most of the other exits are in the ICT area. Thank you for your attention.
Thank you very much. Seed Capital. And now, Pulse Invest with Pontus Ottosson. Please.
Tackar. Hi, my name is Pontus Ottosson. I'm the CEO of Pulse. Okay, I start talking. Pulse is a combination of an incubator and an investor for early life science companies. So we're first of all an incubator, and then we also invest in the companies in the incubator. So we are really early in pre-seed and seed stage. This is pretty much what it is about. It's to find the needle, and that specific needle is Duocourt Pharma with the product Plenadren that we sold last year. That was a Pulse company that we invested in 2003, and was in lead for the company until last year when we sold it to Biopharma for 1.1 billion Swedish crowns. This is also what we believe in. We don't invest in teams or in companies. We invest in good ideas with brilliant researchers, and then we want to help them to form the team together with us. So we don't believe in doing good researchers to become entrepreneurs. We will gladly help them to take care of the business development and to form the company. In short, Pulse is founded 2002. We have started 7 projects. We have sold 2 of them, Duocourt and Ambria Dermatology. We still have 4 projects in the portfolio, and we are aiming for 8 to 10 companies. And I hope to announce pretty soon a 5th company in the portfolio. So we're still in investment mode and searching for new good ideas to invest in. We have a small group of operations, 8 persons today, that's working in Pulse, and we also have a partnership with 32 senior persons, half from the academia, half from the industry. And this is a snapshot of the portfolio today. It's Lids, who's in prostate cancer projects, which is in phase 2-3 today. Lacure, female health product that is in clinical phase as well, phase 2. Accucourt, who is acute allergic project, who will go into phase 1 later this year. And Adenovi Pharma, who's presenting here later on today. So that was Pulse in short.
Thank you very much, Pontus Ottsson. Thank you. And now, next one coming up is CSA, Hydrogen Products with Kerstin Johansson. Please. And let's see if you have any pictures for her also. Welcome up, Kerstin.
Thank you. My name is Kerstin Johansson, and I'm from the Swedish company SCA, and more precisely SCA Hygiene Products. And we have a global presence in the area of personal care and tissue products. And by personal care, we mean products in the area of baby care, feminine care, and incontinence management. And our incontinence products are medical devices. And in the tissue area, we work with tissue products for domestic use and also professional hygiene solutions for institutions and companies. And we are, of course, interested in solutions in the personal care and hygiene area. And it could also be in adjacent areas, for instance, elderly care. And that could be solutions, proven concepts that enable elderly people to live at home longer and live a normal life, or as normal as possible. Thank you.
Thank you very much, Kerstin Johansson. Thank you. And now from Pira Technology, Mr. Dan Svensson, please.
Thank you. Am I the last one?
The next two last one, yes.
Okay, I thought I was the last one. I hope you can enjoy, hopefully, another presentation here. I come from a company or organization called Pira Technology. I don't know if some of you might be familiar with us. We're a pretty old organization, not as old as some of the earlier ones. We were founded in 1946 by the British government, actually, after the Second World War. And we have since then actually helped companies to develop the next generation products and processes. In the beginning, in our early days, we helped the larger British industry companies like Rolls-Royce and British Aerospace, etc., to help them create the next generation products and processes. But as we, in the late 90s, started working more and more towards small and medium-sized companies, we understood that they face barriers that big companies normally don't have. They have a problem, obviously, finding the right investments to develop the new products and processes. They don't lack, however, ideas, and this is where we come in. We help them to create this step change in the new products and process development, and also to overcome these barriers. The technological barriers that some companies might experience, where we can help them through our networks of about 10,000 engineers and researchers throughout Europe to find the right experts. When it comes to financial barriers, obviously, helping them try to find the right funding. For example, we've been quite successful within the grant funding within the European Union and secured just the last couple of years 700 million euros for small and medium-sized companies in their next generation of products and processes. And also the commercial risk that they might overcome in helping them in commercializing the product. So, and what maybe makes us a little bit different is that we take no ownership or in the IP or dilution of ownership either. So in that sense, we're quite different. And So why Pera? I think our experience of more than 65 years of working with open innovation makes us pretty good at that, even though not many of us are left from that time, obviously. And our experience also in our big network of about 10,000 engineers and scientists that can really help you that have the idea to the next generation products and process to make it happen. And looking forward to speaking to some of you later on today to try to find where your barriers are for the next generation products and processes. All right, thank you very much.
Thank you very much, Pera. And here comes the very last speaker on investors from Opposite Capital, Alan McKingdon. Sorry. As you say.
Marchington.
Please.
Good. Good morning, everybody. It's me between coffee, so I'll try and be very quick. My name's Alan Marchington. I'm from Opposite Capital. Let's get the slides going. Thank you. Opposite, what's it about? Well, first of all, I think it's worth reflecting on where we are as an industry. The industry's changed enormously over the last 100 years, and I think that's what got me excited about the whole pharmaceutical biotech industry. We've gone from the left-hand side, the gentleman from Takeda highlighted how old their company is, and they've seen a whole transformation of the recognition of germs, of basically the creation of the FDA in 1906, and then moving through to research organizations like Pfizer and others developing new drugs. And that brings us right up to date today with molecular biology, short interfering RNA, stem cells, regenerative medicine. And at Opposite, what we want to do is take that chart to the next level and invest in those companies that are truly going to be transformational in terms of building billion-dollar companies that will really change healthcare and change the practice of healthcare for everyone in this room and for our children. Next slide, please. And so at Opposite, we're an independent firm. We're based in London. We have a small office in San Francisco, and it's pleased to tell me that my colleague Eric Shiosaki, who's sat over there, is actually with us today, so please say hello to him. He's got a funny accent from the West Coast. We're a small team. We're a team of entrepreneurs who've started companies, run companies. We've been CEOs. We know what it's like to build companies. And we have a unique access to Asia. A lot of our LPs and our funds are based in Japan, and we go to Japan fairly regularly and take our portfolio companies to Japan. So we've got a couple of funds under management that we started in 2007, and primarily we're focused in the healthcare space. Next slide, please. Here's the team. I won't bore you. That's me in the top right, looking slightly younger, and Eric's down in the bottom right. Next slide, please. Our investment focus, we invest in healthcare services, primarily in the UK. We lead up to about $40 million in that space. We invest in life sciences, and we also do secondary investments. That's buying out portfolios of other venture companies, and we've been very successful at that. Next slide, please. So why Opposite? Well, we've got a strategic perspective, I think, on the whole of healthcare and where we want to be and where we want to invest. We're committed to adding value. We like to work with our companies. We'll work in the life science space, in medtech, in new therapeutics. We want to build strong relationships, obviously, as everyone would say. And I think, importantly, we do act as a lead investor. We'll put in anywhere between $5 to $15 million into each company that we want to invest in and reserve more capital to grow the businesses to build something significant. We want to provide complementary skills, and we've got great links with both government and pharmaceutical companies. Our key driver, however, is to maximize returns, and we want to make money. Thanks very much. Let's go for coffee.
Thank you very much, Marchington. Mr. Marchington.